Going on, ladies and gentlemen? In this video, I'm going to be showing you how I utilize ICT concepts in order to be efficient in the market. The strategy that ICT has taught me is called fair value gaps. I'll be teaching you the steps that I go through in order to be, like I said, efficient in the market. If you need more information, please go to YouTube and go to Inner Circle Traders. This is the person that I've learned my strategy from. That is now something I use. It's not my strategy, it's not something I teach. It's just something that I know to do within the market that I've learned from Michael, which is the founder of Inner Circle Traders. Just wanted to say that before I start teaching you how I do what I do. Okay, so at this time, this was May 5th, 2022, where I had explained the markup that I will get into live. This was a live session. I mean, Price just did exactly what I wanted to do. Damn. It's fun. Price did exactly what I wanted to do. After 130, you see the fair value gap here, and I will be able to get in right there to take it down to the lows. I'm about to do right now. Just tell you guys that this stuff works, yo. So I got my entry, my stop loss is up here. Reason being, this is a great area for stop losses because Price has respected this area. 50% of this fair value gap. All you got to worry about is the body of the candle and not the wick. And Price is going to continue to go down, take out this low, take out this low. Same thing for SPX. And so our liquidity void. This is the fair value gap that we entered in. If you entered, and this is the second entry. Price has to rebalance this here. So Price broke structure here. It broke structure here. It's already rebalancing. If it just leaves, then that's fine too. But if Price comes back up, it will be taking out this here, just like the last time. This like the pair that I showed you, GJ. Price entered the fair value gap, came down, but entered again and rebalanced Price. So if it enters again, I will expect Price to rebalance. And if you got in right here, you'll be good. Because Price, when you see small movements like this in the same place, this is a level of liquidity. This is a level where sell side liquidity will lie. Just gotta know what you're doing. Okay. So the first thing I do is look for 130. Okay. So I'll mark up 130 in the afternoon, and I'll look prior to that 130. But before I do this, I want to know what the bias is in the market. So if I'm looking at the weekly time frame, which I go to very so often, I want to see what the structure is in the market. So here you have a higher high, higher low, higher high. Price broke structure, which is here, this higher low, and created a lower low. So now you're looking for a price to go back into a bearish perspective. So price comes up, creates a lower high, now creates a lower low again, and another lower high. So what do you expect Price to do? Go to the downside. So now I have my bias within the market. I go down to the lower time frame, which is the daily time frame, and I see what has happened within the market. Structure is created again here, higher high, higher low, higher high. Price is broken structure, creating a higher low, a lower low. It's broken structure here, price is here, and now it's trying to create that lower high, which is created right about here. So now I want to see price go to the downside, taking out this low here. Okay, creating a lower structure. right? So now that I found my narrative, which is the first step, the next step is to find my entry within the market, okay? So now, knowing that perspective is bearish, I want to see price take out the highs first before taking out lows, okay? These are my levels. So now the next step, like I said, I want to see price take out the first high and then trade lower. So this here is a high, and this here is one of the highs as well. So knowing that price has already entered this order block here and traveled low, price has entered this fair value gap, which I will explain, and traveled low, broken structure. I want to see price go up to this high, possibly get to this order block here and trade lower. But let's see what happens. So I'm waiting prior to 130, price is going to the upside. So now this first area I had missed within the market because I was looking at GJ and I wasn't able to get in my level. So my level was right here, which is this fair value gap. Okay. So price has taken out this high, which is the second step. And then the third step, you want to see a displacement back to the downside. Okay. And that's what occurred. So now price goes low and the third candle is created. So now, as you see, is 1, 2, and 3. The second candle is the displacement candle, as he specifies within his training, Michael. This area here has not been traded into or rebalanced within the third candle. Once that occurs, you want to place your parameters here, signifying that this is your gap. This is your fair value gap. 1, 2, 3. If the third candle does not fill in the displacement, that is your fair value gap. Okay. So now price is traveling up to fill it with the fourth candle. Once price goes in, what I want to do is get in. So where I entered is right here. I did not enter here. I did not enter here. I entered right here. So now you have to understand that this strategy, any strategy that you use, you are expected to manage your risk, manage losing trades. So if this was a loss, it's a managed loss. So here, if you have a $500 account, if you have a $1,000 account, you want to place the lot size that you're able to withstand within US 30, because US 30 is a very volatile trade, pair. So if you're using a $1,000 account, you want to place a 0.1 or 0.2, 0.3, 0.3 at max, okay? And then you want to place your stop loss above this high, okay? So now this here, which is explained in ICT's mentorship, is called intermediate term high. If you want more information on that, please go to his YouTube. I am not your teacher. I'm just showing you what works for me. Okay, price is not going to take out this high. Fair value is created. I enter here. My stop loss is up here, which is 88 points. So 88 points to respected with 0.3. What is that? So make sure you comment down below what the lot size would be if you were to enter here. If you were to enter there and you had $1,000 account, what will be your lot size? And you have to withstand 88 points, okay? Which is 880 points, pips. So 880 pips with 0.03, you're risking $264. With 0.01, you're risking $88. With 0.02, I believe you're risking about $166. Okay. So now having that in mind, I'm in the trade and we're just waiting. So the levels, after knowing your entry and getting in, and even before getting in, you have to know your levels of take profit. Okay. This is my level of take profit. And this is another level of take profit. Okay. And these are places where you can either take the whole profit or take partials. And this is the parameter. This is the range that I'm working with that I know price will break out of. Okay. So let's play it out. Okay. So price is going in and it starts to break lower. As you see, price starts to break lower and you're in profit. So now the first level is completed. Okay, first level is completed. What happens here is either you're taking your profit, if you have a goal in mind, take your goal. If you're using 0.03, you enter here, and your goal every day is to make 50 points. Take your 50 points and leave the other lot size in to go target your larger targets. Okay, so you take out your goal, you got your money. Now you bring down your risk to that low to that high that was created. Okay, just a little bit. You don't bring it down all the way to entry because price still has to rebalance itself before you do so. Okay, so now let's play that out. So price is broken structure. This is lower, this equal lows. I want to see price rebalance that imbalance. Okay. So now in the 2-minute time frame, I see a imbalance within the market. Price has not traded up into this area. So now if we go to the 5-minute time frame, we see that we have 1, 2, and 3. The third candle has yet to travel back into that gap. So now what I can do is mark up that level as my fair value gap. So this is what I do right here and this here. Right? So now let me go to the lower time frame. Okay, let me make this a different color. You guys can see that this is the 5-minute fair value gap. Okay, it's the 5-minute fair value gap. So now, as you see, price has broken structure here and has left the gap. Now, in one of Michael's videos, he says that support and resistance changeovers or tactics or perspectives are only valid when there is a fair value gap. So right in the middle of this support into resistance, there's a fair value gap. So I want to see price go into this more than focusing on entering here. So I want to enter right about here. Okay. So now this is a more in-depth fair value gap to enter in. So now I have my entry here already. And then I have another idea, trading idea to get into. So price starts to go up. It's broken structure, so probably price will start leaving it. But I'll start marking up levels that I want to be taken out in order to get up here, because price needs to rebalance itself. Price is going to create engineered liquidity. Okay. In Michael's videos, he explains that the banks are working together to take our money. They're saying, hey, I want to sell here, but I need you to buy here in order for me to sell here. So I want you to engineer a way that retail can get in order for me to see that as a level to take out, because their money is going to be placed there. So now price is engineered liquidity, that level. Price has gone up again into a fair value gap. And that fair value gap you will see on the 5-minute. 1 minute, here we go. I mean the 4-minute. So here you have your fair value gap is being traded into multiple times, okay? But it's just creating liquidity. You could have entered right here if you wanted to, okay? Based off that fair value gap, and then have your risk above here and make sure that you're able to withstand it. Okay, price starts to go up. And if you would have entered there, that's the next level of buy-side liquidity. So price is still engineering liquidity, creating support right in this level for retail to react to. So price starts to go up. And now at this point, I have entered in the market again. So now 2 levels have been secured. Okay. So my stop is above here. So right here is 0.02. Remember, I took my goal, which is 0.03 to go to 50 points, and I got my goal. So I took out half of my my goal, which is that level. Okay. So now 0.02 is in the market. So now here, what should I do? Should I place 0.03 or should I place something lower? I'm going to place a 0.01 to withstand this withdrawal, to withstand this drawdown. I'm going to put a 0.01 to withstand this drawdown. Okay. So now I have entered the market. Price has entered my first entry again. So if I was to place my stop and entry, I would have been stopped out prematurely. Okay. So price has dropped tremendously from this level down into the area of liquidity. Okay. So now price is going to continue to go lower. Okay. It breaks structure again. So structure is here, lower high, lower low, lower high. Now price is going to continue to go lower. So right now, at this time, I can place my stop loss at entry because the price is way beyond, so far from the entry that I have. Okay, so my first entry is secured, is risk-free. Now price has gone here, and I can take my next level, take it out 0.01. Now 0.01 is left. And this is the next level to be taken out. 0.01 is going to go all the way down to this low, and I'll be done. And the same thing for this here. 0.02, and I'll be done here. And as you see, price has gone to the low and I'll be finished. And that's exactly how I'm able to use ICT's concept in order to be efficient within the market. Please comment down below what you would have done within this scenario. Like and subscribe to this video. Make sure that you are risking what you are able to withstand in drawdown. And that's it. Make sure that you're going to ICT's concepts, which is on YouTube. It's called Inner Circle Traders. You're able to learn this strategy, but don't call it your own because this is Michael's strategy. He's only giving it to us so that we can be efficient as well. And that's what he has been able to do for me. Have a good one.